Dave White, the one and only Tom O'Brien, is off today. I'm sitting in his humble chair, and we'll try to do the best job I can and not gloat too much, because we had a big profit in our daily newsletter, and our longer-term investment newsletter today did well. I will gloat later in the show. In the meantime, we had a great deal of action in the markets, and I always like to start my show off with just a little bit of history before we get started, so let's do that.
Then it's all just a little bit of history repeating.
It is. There's nothing new under the sun, is there? But on this day in 1969, there was something new, and that is someone that had stepped on the moon had stepped back on terra firma, and of course put an end to the pledge that JFK had in 1961 that we would send a man to walk on the moon and return him safely on to terra firma. And it was this day in 1969. Of course, he said he would do it within the decade, and they did. And yes, they did. Let's get into the market, though, because it's so juicy. It's like looking at a beautiful, gorgeous steak that's got the grill marks on it, because a little bit of everything for everyone, unless you're long. Today, the Dow Jones ended off 162 points at 17,569er. And the S&P at 2079, down 22. There's a little negative tick out here. Most people don't remember what that means. The NASDAQ was off at 57. And, of course, this is on the back of a monster earnings beat by Amazon. How could the NASDAQ end up down 57? It's amazing. Yes, it is. Well, we'll talk about that and more as we do the roundup of a great deal more. The energy, of course, no respite for the longs in crude. It's off another 49 cents, closed under $48 today, $47.96. Brent was off 75 cents at 54.52. Nat gas, no place to hide, off almost 4 cents today at $2.77. Of course, natural gas I'm watching closely here. The reason why? This last week of July is when contracts are signed for long-term power generation over the winter. And I think they've got some little conference somewhere I read years ago. But it's right around this week when you start seeing what demand will be that's fixed. Normally you get some hot weather, and they can run through a lot of gas in August for air conditioners in the Midwest. And especially where natural gas tends to be used a lot. So probably a good week next week. Maybe not any respite for oil bulls, but natural gas, this is going to be the first heads up we get of the summer. And, of course, normally you get maybe into the 15th of August before you actually start seeing natural gas move. But I think we may get at least a few signals in nat gas next week. When we look at the metals, gold was up, and, of course, mostly I suspect that with crude down, they were looking for anything for the safety trade going into a weekend where everything looked rather horrible. Although gold did run late in the day, silver still closed off 3 cents at $14.69. Gold was $10.79.90 the last tick I saw. And, of course, copper basically flat. And looks like 2 1/4 is in the cards for copper. Maybe we just had 1 day of respite going into it, but does not look good. Europe, of course, even before the major destruction in the United States markets, closed at 11:30 Eastern time today. The DAX off 164 at 11,347. The FTSE was down 75 points at 65.79, and the CAC, CAC 5057 off 29, which was about a little more than 0.5%. When we looked at Asia and the way they closed going into the weekend, probably would have given us a little bit of clue what's going on. The Nikkei was down almost 0.7%. It's still above 20,000 though. 20,544. Shanghai 4,070, which was off 53 and down 1.25%. Hang Seng off 1%, closed at 25,128, which was a little more than 1%. That gets the roundup started in the markets. Of course, the reality of trading a day today was a lot different. We saw what a lot of people thought was going to be a bloodbath for the bears coming in this morning. That is on the heels of numbers, and those numbers were leaked yesterday. And of course, everybody says that it's an old honest mistake. Government official, he's been around a long time, didn't mean to accidentally leak the document from the Fed. Of course, we're going into meetings next week. But my guess is that that was no accident at all, that the Fed wanted those documents out there. The reason why is they saw the movement in stocks like Google and Amazon and knew that we were getting into some huge euphoria. Of course, it's been over a year since the now head of the Fed, Miss Janet Yellen, was told to shut up, Grandma. We don't want you talking about the biotechs in a bubble. You don't know anything. Go back to your Fed business and leave us alone. Of course, anybody that ever talks about a bubble is, at the very beginnings of it, always shouted down. No different than 1929. In the summer of 1929, they almost tried to lynch anybody talking about it, and no government officials talking about a bubble then. They were told to shut up. No different today. There's very little different, by the way. Human nature does not change. But a little bit of people thinking, hey, what's going on? But if you look in the documents, basically they're saying 4 rate hikes, that it will go up 1.25%, a little more than 1.25%, through next summer, which was a little different than I thought. I thought they tried to get everything they could in before the end of the year and try to stay away from the election season next year. Looks like, at least in their internal documents, tell a different story, and that is raising rates all the way through next spring and get a good 4 or 5 different % rate hikes in there, which is not a whole lot. But what the market is scared of, a lot of academic work has been done on just how much that affects the market. And pretty much come down to somewhere around 30% of all the profits in the S&P 500 are because artificially low interest rates. So that is the headwind against us. When we come back, we're going to be talking a lot of technology. You can give me a call at 877-927